Okay, so finally I'm doing this. This is going to be really interesting. I've been using this model for past 6 months, and every time I use it, I get then amazing results. You see these swings I catch inside my free Telegram and Instagram, these executions, these thousand fucking dollars in a single trade. That's all this model. So here it is. It's for free for everyone. I hope you would enjoy it and get as much value as it's worth. In this model, we are going to deal with two time frames. We will have a higher time frame and a lower time frame. On higher time frame, we will be looking for a higher time frame key level, which could be a fair value gap or an order block. Most of the time, you will see me using 4 hour as the higher time frame key level. I'll be using a fair value gap or an order block to give price a reason to bounce back from a specific level. And on lower time frame, I use 15-minute mostly or 5 minute. On higher time frame, we look for the liquidity pools the price has taken and the price is going to take. And we look for the clear market structure shifts from bullishness to bearishness and bearishness to bullishness. On lower time frame, we look for the opportunities and price confirmations that gives us a reason to look for the opportunities. If you focus right here, we have a rough schematic right here. This is of a bearish market. You can see prices coming from a high to low. We have taken some buy side liquidity and we are targeting the sell side liquidity. Now what I am interested in is this small price movement right here. You see, I want price to hit a higher time frame key level, which could be a higher time frame fair value gap or a bearish order block right here around this level near the buy side liquidity that we have taken on higher time frame and then bounce back right here. And that's where I run into the lower time frame and look for opportunities. This is only valid if price has not taken the sell side liquidity right here and we have some failure swings right here, so that we can conclude that this is a low risk on liquidity run and we can get a lot of profit just by trading this small price movement. After we have confirmed all these steps, the buy side has been taking the sell side drawn liquidity and price is inside a higher time frame key level, then we look for the opportunities on lower time frame. You see, this is the same price movement from here to here, right here on lower time frame. We have higher time frame key level and a clear drawn liquidity. When price is around this level, we look for the SMT. Now, SMT is the divergence between two correlated assets. If you don't understand what is SMT, you can check out my latest video on my YouTube channel. I explain the SMT in a very comprehensive way. This is actually one asset failing to create a higher high while another asset has created the higher high. Right, in this case, it can be from this swing to this swing or this to this swing. If we have SMT, then we go forward and look for the opportunities through fair value gaps, breakers, or order blocks, and then trade to other sell side liquidity. But if we don't have this SMT right here, we don't have any model that you're interested in. Then we look into another market and look for the opportunities. So, moral of the story, if even if you don't have a higher time frame key level right here, and you have taken some sell side or buy side liquidity, and you have SMT, you could trade. But if you don't have SMT, I highly suggest not to interfere in the market and stay away from it because that would save you a lot of time and money. So SMT is our only confirmation that we need, and then we look for the entries right here and here. You can see there's a market structure shift as well. So that was the bearish example. Now let's look for the bullish example. You can see right here we are going from low to high and we have taken some sell side liquidity right here and buy side liquidity is our target. I am interested in this piece of price section right here from this low to this high right here, and I want to see price hit a higher time frame key level. Now this could be an order block or a fair value gap. Most of the time you see it as an order block and fair value gap aligning together. You can count on any of these. I want to see price bounce back and then I go to the lower time frame to look for the opportunities and confirmations such as SMT. Right here you can see we are going from sell side to buy side, we have failure swings, price has shifted the structure, and now we want to see the most important step getting completed, which is SMT. If there's no SMT, there's no trade. If you don't have higher time frame key level, that could be fine if you have taken the sell side liquidity and you have cleared drawn liquidity. But if you don't have SMT, that's a problem. So you stay away from market when there's no SMT. Right? And after this, you wanna see for the entries right here. Every time price pulls back, you wanna enter to other price of liquidity until it's been taken, and then you go off. That's how we're gonna use this model. Now let me break down this model in simple 4 steps. Our very first step is higher time frame fair value gap after liquidity has been taken. This fair value gap is our point of interest. After price has taken some buy side liquidity in the bearish market, we look for the higher time frame fair value gap or order block. That is our key level, and we want to see price come back to it. In a bullish market, we want to see price take some sell side liquidity, and then we look for the higher time frame fair value gap or order block. That is our point of interest. Our next step is clear drawn liquidity. Now this drawn liquidity should be aligned with the failure swings and low resistance liquidity that we have created recently, and we should have a clear higher low that we are going to target. We go from liquidity to liquidity. We would have taken some buy side liquidity and then we go to sell side liquidity, or we would have taken some sell side liquidity and then go to the buy side liquidity. Our next step is SMT when price is inside the higher time frame fair value gap. It is our only confirmation that smart money are actually interested in the levels that we are trading. So if there is SMT, there's trade. If there's no SMT, we are going to stay silent on that day and go out, have some fun. SMT is the most important part of this whole model once again. Our last step is entry inside kill zone. We're gonna wait for the liquidity and volatility, and then we enter inside a kill zone. For normal days, we will wait inside the new kill zone and then enter on the days like nowadays, in which we are inside the situations of wars, like Israel, and other problems. You would see the Asian kill zone give us a lot of huge moves as well. In normal days, you would see New York kill zone do that. Now, these are the 4-step breakdown. Our first step is higher time frame fair value gap after liquidity has been taken. Our second step is clear drawn liquidity. It could be high or low. Our third step is SMT when price is inside the higher time frame key level. Now, this SMT is the most important part of this model. I've said it again and again just to remind you that if there's no SMT, there's no model. And our last step is entry inside the kill zone. Why inside the kill zone? Because we are waiting for the volatility. That's the model. Now let's look at the example. This right here is a trade I posted on Friday inside my free Telegram. You can see this is 5-minute chart. Our very first condition is clear higher time frame drawn liquidity, and we have taken some liquidity before going higher and before hitting in the higher time frame key level. You can see we have taken sell side liquidity right here. We have clear buy side drawn liquidity right here. Failure swings. This suggests that price is going to explode and then a higher time frame key level. After hitting the higher time frame key level, we wait for price to break the structure and give us the SMT, which is the most important part of this whole model. After price gave us the SMT below the opening price, which is extra bonus point, and then we look for the opportunities to go high. We went long right here and then took our position off right here. That's how this works. Our very first step is clear drawn liquidity after price has taken some liquidity already, and then we have clear higher time frame level as well. And after that, our third step is SMT right here inside the higher time frame key level. You see? Then we get the entry inside silver bullet right here. If you look at this chart on 3-minute, it's look like just like this. It's a lot much more clear. You can see a lot more details right here. These are all failure swings, which is a very good type of liquidity to trade. And we have clear SMT right here with DXY. DXY took this low with this swing, but euro dollar failed to take this low with this swing. So that's an SMT. Is the divergence between two correlated assets like DXY and euro dollar. And then we went long from this candle. This is actually an entry on 1 minute. Let me show you right here. You see, that's the fair value gap after hitting this proportional block. Then we went long from here, 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 and here. There were actually a lot of opportunities as we had this SMT which supported the idea and this order block that also pushed the price higher towards this buy side drawn liquidity. Next example, all of these threads are already shared inside my free Telegram, and there are executions, analysis, and me coming out the threads as well. You can check that out. There's a link inside my YouTube channel bio as well. This is actually from 1 hour to 5 minute market maker buy model. We are going from sell side liquidity to buy side liquidity. We have failure swings and a market structure shift. After we have cleared drawn liquidity and we have taken some liquidity, we want to see price does the SMT with the correlated asset. In this case, it is DXY to USD JPY. You see, on dollar index, price took this low with this swing, but on USD JPY, price fell to took this low. So that's a divergence between two correlated assets. And you can see we went long from this candle right here. This is an order block. We took something off right here, here, and then here. Here's an execution. Send inside my free Telegram. When market was printing live right here, you can see. And these are the results. Next example, pound dollar 5 minute chart. You can see right here we have taken some buy sell liquidity. We have clear drawn liquidity right here. We also a beautiful schematic right here, which I have created myself only for you guys. You can see we have SMT as a very important point of model, which I have included in this schematic right here. This SMT is whole reason why we are trading this. There's no SMT, there's no trade. After buy side liquidity has been taken, we look for the clear drawn liquidity, which is sell side. It is also a bearish market already. You can see right here these bearish swings. And then after confirming the SMT with DXY, we look for the opportunities to go short from this candle right here. You see, these are the executions. And this is in the live market. You see, that's right here. Prices is still printing. I went from this candle to this candle. That's a lot of pips. You can see the liquidity right here. This is the huge liquidity pool. Next example, this is dollar yen 5 minute chart. You can see once again we have taken some buy sell liquidity, equal highs right here. We have drawn liquidity as sell side. It's beautiful schematic once again, in which I highlight the SMT, as SMT is the only reason I took this trade right here. Price has failed to take the high, which is from this side, far side, the chart on JPY, but DXY took that high with the swing. So I looked for the opportunities to go short. Right here, you see, after price took this high doing the turtle soup, I went short. You see, yes, that's right there. Good partials again, and do this swing. That's how you trade when you know what price is going to do. We look for the SMT, liquidity, and then entries. If our higher time frames suggest that we are going to go lower or higher, all of these pairs has some reason or some valid point with higher time frame. I am not just going on lower time frame and executing just by looking at these order blocks or fair value gaps. I have to have the SMT and the higher time frame key level. And let me give you a simple tip. Whenever you will see the SMT forming when price has some volatility, it will be always inside a higher time frame key level. Yeah, you heard it right. SMT will always form inside a higher time frame key level. It could be forward, it could be daily, it could be weekly, or sometimes it could be even monthly. But SMT always form inside a higher time frame key level if it is valid and it has liquidity at that time. So whenever you see the SMT, you know that price is going to explode toward the market direction, that is price is going to balance. Our next example is pound dollar. Once again, it's 15-minute chart, a beautiful trade and a beautiful move. You can see these candles. I love these candles. Everyone love these candles. This is 15-minute chart, I guess. Yes, this is 15-minute chart right here. 15 Jan 2025. You can see we have SMT right here and an order block. After price has taken sell side liquidity, buy side is our target. We hit the order block. We did the SMT with euro dollar and then we look for the opportunities. Very first step is look for liquidity and draw on liquidity. Then we wait for SMT. Then we look for the opportunities. It's just that simple. If there's no SMT, there's no trade. If there's no liquidity for our draw and price has taken, there's no trade. Both of these conditions are very important. We need to have a clear draw on liquidity and a clear SMT with the correlated asset. Once we have both of these things aligned, we look for the opportunities on our lower time frame, in this case 15-minute. Then we go long right here. You see, these are the executions and the live market end right here. All of these threads are shared inside my free Telegram. You can go and check them out right there. Next example, this is the most recent one. USD/JPY 3-minute chart. It's 14 May 2025. Yeah, I wasn't really active with trading these past few months. Maybe market wasn't as well. You can see I have also given this beautiful, very beautiful schematic that is my art exclusively for you that I've shared inside my free Telegram. You can see I even drawn all the failure swings and the market structure shift with this SMT. After price has taken some buy side liquidity, we are looking for an old low or old high as our drawn liquidity right here. You see? And these failure swings. That is low resistance liquidity. After liquidity, our next very important, very important part is to look for the SMT, which is smart money technique or the divergence between the correlated assets. For me, I usually look for the dollar index SMT because that is very strong and it gives us very amazing moves as well. In this trade, you can see I executed right here around these candles. We did this bearish order block and then I took out position right here. Yeah, I was doing the lower leverage because I didn't want it to trade, but this was really an amazing move because of these low resistance liquidity right here. You see, that's what I am interested in. Now these trades are for your own study. I want you to pause the video, take a screenshot, and then study them from the very first step, liquidity, to the very last step, which is entry. You will go from left to right or right to left, whatever. You're gonna follow all the steps and study them. And if you are really passionate, you're going to go inside your own chart and mark them out as well. That will strengthen your eyes to see these models more frequently than those nerds who are going to just watch this video and try it in the live market. I suggest you to backtest all of these steps and then look for the opportunities using this model because this model is really interesting and you are going to love it if you know how to use it. This is also for your own study. All of these are actually shared inside my free Telegram. You can go and check that out. It's on the same date as shown on your screen right here at April 6th February. These failure swings are beautiful. I love to trade them right here. Study them, backtest them, and let me know if this is helpful. That is all about this video. I hope you will enjoy backtesting the model because this is really an amazing model. And if you backtest this one and try to strengthen your eyes to look for these types of models, I don't think you will ever be inconsistent or unprofitable trader again. This is an undisputed way of being profitable. SMT, higher time frame key levels, along with drawn liquidity and lower time frame entries, that is the blueprint. That is all you need. Just focus on them, and anything that you seem is confusing, you can ask in the comment sections. And you will also find a lot of other videos on my YouTube channel that will help you understand the model more better. Until next time, stay tuned, stay sharp.